The entire global stock market was rattled today as we see the true volatility becoming present. This is represented with investors unable to cope and entering into panic mode. They were profit-taking and moving into safer stocks, leaving growth behind. As we approach a tighter and tighter monetary policy, we have to start wondering, what will the future look like? You came here for the truth, so let me unveil that for you. Today we are going to look at what's going on in the markets. I'll show you several charts, a lot to cover today. Let's begin by taking a look at this. You can see it, the sea of red. All of these markets took a beating, and it doesn't matter where you look around the world, but they're all giving each other the cold, the virus. The contagion is present when you look at the east, the west, and everywhere in between. Now, I'm going to take a look at several charts today and show you why this is all important, all right? So you could see the markets themselves, but let's focus a little bit more in depth. The Fang stocks, which are obviously and clearly the best performing group of stocks that this bull market has seen. And you can see this pattern here, that they had a little minor dead cat bounce. This is going from the end of September into this present day, the 8th, as I record this, 8th of October. And you can see here where the trend has been for Fang stocks. But let us not forget what happened all throughout 2017 after the dip experienced in late January. Then we had, of course, this huge run up in Fang stocks. But for the short term, things have changed. Another look at the Fang stocks. Just wanted to show you that we're going back into levels we haven't seen since late May. All right, that's showing you right there. And essentially this has been up and down and up and down. That weakness has been present ever since this whole fiasco between the US and China really escalated, and it's been unable to push higher. Now, certain stocks, you could focus on them and say this stock is better, that stock is better, but we need to, of course, broaden our horizons just a little bit. I mean, even the Fang stocks themselves are having trouble. It can't be carried by one or two. That's just the way it is. Now, looking at Europe as well, this is the Bloomberg Europe 500 stock index. This has been brutally beaten up into the levels that were seen back in April of 2018. This is one group of stocks that has been suffering for years and years. I mean, look at what happened with the Euro viral contagion. They call it the sovereign debt crisis, starting from, let's say, after the financial crisis, but really it started heating up in around 2011 or so. And then we had Greece, and then we had what could have easily spun into a downfall of Spain and Italy and more. But those two countries are not doing well right now. And the one that I really love to focus on a lot, and I'm keeping my eyes on it, if you want to know where my attention is on a daily basis, it's on Italy, because this is a country that has been doing very poorly for a while. Hopefully this new government will be able to come in and actually fix some problems. I am not hopeful, not because of anything to do with the government, but simply because nothing ever gets done. No progress is ever made over a long-term period. You have certain times in the years when you look back in history where maybe there's a few years that were positive and things start looking good, but eventually things turn sour yet again. And the solution that they will provide, as always, is for a government to sell off its assets. And many people confuse this with the privatization. So they get rid of a lot of the government programs, they get rid of a lot of the government departments and replace them with some sort of private entity. And you know, you could argue back and forth about that. That's not what I'm talking about here. I am talking about giving up, selling different assets that belong to the country or the people. So it wouldn't surprise me one day into the future where you would have some of these national treasures, the Roman Forum, being replaced and renamed to the Starbucks Roman Forum. And something as such as a travesty as that could very well happen. They would turn it, and they would actually maybe be able to spend more money, maybe be able to fix it up and create more tourist attractions surrounding it and have more investment. But that's something that really crosses the line and, as far as I'm concerned, shouldn't be done. There are other things that I believe that the government should have absolutely no business dealing with whatsoever. And unfortunately, they have their hands in all the wrong things. It's not just Italy. This goes within Europe, goes within Asia, goes within looking at anywhere, US, Canada, anywhere. European bank stocks are suffering. We're going back into the levels of 2016. That right there should be scaring everybody, because we're looking at this and have to think, well, continuously drops. I've been covering this now. I said it's in a bear market. Then we have individuals coming on here commenting saying, actually the stock market is up. I don't know what you're talking about. Shut up. Well, what are we talking about here? Are we talking about the Fang stocks, which are back into levels not experienced from a few months ago? Are we talking about the European stocks? Are we talking about the stocks in Asia? Look at the Chinese stock market is in bear market. What are we talking about? Because obviously we're on a different page. If we're looking at, maybe you could say, Apple stock, Amazon stock, okay, then that's different. That's a different story. But quote unquote, the stock market is up. That's not true. That isn't true. Ever since we experienced the dip at the end of January, that statement has not been true. All the way through 2017, it was just on fire. It was doing so well. Ever since that moment, things have really been messed up. Now, the global systemically important banks, for those who don't know what that is, that's the too big to fail banks. We're going back into levels we haven't seen since 2017. And that right there should be worrisome, because these are the stocks that if they start to decline, I mean, look at a bank like Deutsche Bank. Now, this right here should be very, very scary to anybody who's paying attention. These are the stocks that we were worried about back in 2008, and we are well into a bear market for these stocks right now. But I guess I'm overreacting, right? Now, the Chinese currency, I'm looking at this, and we are going into that level nearing 7 to the US dollar. That right there shows us either they're allowing this to happen, or there's some sort of devaluation that's occurring. They just came off of a 1-week holiday, and right away the stock sold off, the currency fell, and we're going to see how this regulates throughout the week. Will they push it down? Will they push it up? We're going to see. The MSCI Emerging Market Index down over 20%. It's 21.39 to be exact. That shows us the weakness that is persisting right here in emerging markets. I keep covering it, and of course, we can pinpoint different ones that have been doing good. For example, Brazil's currency has turned around a bit at this time because of the hope in the next election and so on. But that isn't going to make anything fixed overnight. It's not going to fix anything in the short term. So these hopes are basically already pricing in things into the market. Remember that. So they think that if this individual gets in, or if this happens, then this will occur. And so the market immediately prices that in. But what if it doesn't happen? Well, then the market drops back down and then even overreacts to a level it was previously even showing further weakness into. Now, this is just something I want to touch on, actually two things. Number one is the securities industry in New York City, and I wanted to point out to how lucrative this industry is. The average salary, including bonuses, increased by 13% to $422,500 in the year 2017, the highest since 2008, and higher than in any other major industry. So we're going back to levels that are exceeding what was experienced in 2008. The average bonus paid to industry employees in New York City increased by 17% in 2017 to $184,000, the highest in a decade after adjusting for inflation. So we've got an issue going on here that more money is flowing into these companies when the global systemically important banks are doing so poorly right now. They're doing terribly right now. And even all throughout the financial crisis, we saw these CEOs getting these massive, massive bonuses, and then they were buying yachts with it, they were buying planes with it. And why? The stock wasn't doing good, the businesses were going under, and they said, look, this is what we want to do, shut your mouth. And that's what happened. All right? Hank Paulson gives himself a $200 million tax break. No worries. As U.S. household debt rises and wages stagnate, millions of Americans are thinking about tapping into their home equity to keep up with their day-to-day expenses. That's how I want to end the video. Just think about that. Tapping in to your home equity to pay your bills. Now, if you've got a home and you're paying down the mortgage and then you pull out money from that to pay the bills, there's something not right. There is something very, very wrong about that. Why are you paying into the home? Why do you have a home in the first place? Okay, people are struggling today, and that shows us, number one, how expensive homes are, but how expensive everything else is. And yet we have the opposite end of the spectrum where we're seeing stocks rising to this most ridiculous level, home prices ridiculous levels, and come on. We need to get back to a sense of reality. This is a joke and it's not going to end well. The thing I worry about is not the fact that stocks can rise. They can rise for years. It's who's going to be hurt in the end. That's what I worry about. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel. So all you got to do to support the channel is give me a thumbs up. If you could do so on all the videos that you agree with, that you like, I would appreciate that. Just hit the thumbs up. If you want to, you can hit the subscribe button, because when you do so, you're joining nearly 150,000 people all over the world in the most informative comment section you will ever find. We've got people all over the place that comment on here and just give their information, and I think it's such a valuable resource that goes beyond anything that I can personally provide. So I'm thankful to all of those who comment on the video as well. If you want the financial education that you were not taught in schools, well then, these two books have it all. When you look through these books, you will be so informed about everything that you were supposed to be taught but never were. So check them out. Link is in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.